Hello, everyone, and welcome. I'm Shannon Stroud, CEO of Invest Africa in the US, and thank you so much for joining us today for our webinar, The DRC at a Turning Point, What Investors Need to Know. We'll focus on the geopolitics, the political economy, and the evolving investment landscape. So thrilled you all can be here today. And we have over we're close to 400 participants. So there is real interest here, and we're excited to dive into this. Before we begin, just a quick word. On Invest Africa, we are a two-way business and investor platform connecting global capital with credible opportunities across African markets. And our members include institutional investors, corporates, DFIs, advisory firms, and we focus on practical market insight, deal access, investor introductions, policy engagement, especially certainly across the continent, and also, helping our members to access the opportunities for global capital, and certainly within the US. So our focus is really kind of just to connect credible projects with policymakers and institutional capital around the markets that matter. And we're very fortunate to have a great panel with us today. So let me just talk a little bit about our topic at hand. If you could just go to the next slide, George. I should flag two things for you. So my colleague Callum Hill will be sharing a little bit about our upcoming events, which will include a members-only dinner series here in DC that kicks off in February, on to some events around the World Bank meetings, and then globally around our mining series. So Callum can share a little bit more about that. But just to the topic at hand, over the past year, we have all seen the DRC moving from being viewed primarily as from a perception standpoint, a risk market to a strategic one. And it's driven by obviously demand for critical minerals, renewed US engagement, and the shifting dynamics globally and regionally. But today's session really isn't about sort of optimism or pessimism. It's about clarity and what has genuinely changed, what risks remain, and where investors need to be clear-eyed as they assess the opportunity. So look forward to diving into this topic with our panel, which will bring some really great perspectives. So let me just do some quick introductions. First, we have a longtime Africa analyst and advisor, Joshua Walker, who's the director of programs of the Congo Research Group at New York University. Joshua will moderate our discussion today. We are joined by Paul Hinks, chairman and CEO of Symbion Power, and also chairman of Invest Africa in the US. We have Michelle Lusembi, who is a manager director with Chinu Consulting, and brings a deep on-the-ground financial perspective. And last but not least, Nabil Sami, who is the senior investment director with Africa 50, working at the intersection of sort of government's infrastructure and institutional capital. So we're very grateful to our panel. Without further ado, let me kick it over to Joshua, and I encourage you all to stay on the line to hear a little bit more about the DRC Investor Sentiment Survey we're currently underway with at Invest Africa, as well as our upcoming events. But for now, to the topic at hand, and over to you, Joshua. Thank you so much.
Thank you very much, Shannon, and thank you, Invest Africa, for inviting me to moderate this panel. So I'm going to start with a little bit of background about the current geopolitical context of the DRC to sort of set the scene before we delve into our panel and our conversation. So the DRC is huge. It's a country that we usually say is either about the size of the US east of the Mississippi River or of Western Europe. And as Shannon mentioned, it's started showing up on the radar of US and other investors, particularly because of its abundance of critical minerals and rare earth elements. So things like copper, cobalt, tin, tantalum, tungsten, and gold. Just to give you an idea of where the Congo sits in terms of these resources, the DRC currently supplies about 75% of the world's cobalt, which is of course critical for making batteries, about 40% of the world's coltan, which is used to make capacitors in most electronics, and 11 to 13% of the world's copper. Now, I think a lot of people on the call probably realize that the DRC has a troubled past that's contributed to a negative reputation, at least for investment, historically speaking. So we can think about the secession of Katanga going all the way back to 1960, the corruption of the Mobutu dictatorship in the 1970s and 80s, all and into the first and second Congo wars in the late 90s and early 2000s. But at least from a macroeconomic perspective, I would argue that things are looking up somewhat. So in 2021, the IMF resumed support to the DRC under a 3-year program that dispersed about $1.2 billion dollars. And last year, it began a new 3-year extended credit facility with the DRC. And this is important, of course, because the IMF program encourages the world's largest DFIs to also lend to the DRC. And so there's something of a multiplier effect. And the IMF program helps to build confidence for investors. Um, I think it's important, though, to acknowledge that one of the other reasons, besides critical minerals, that the DRC has been making headlines is, of course, the conflict in the country's east, which is very significant, but I would also suggest quite localized. I'm wondering if, George, you could bring up my first slide just so I can show people. So it might be hard to see here, but we're talking about a conflict called the M23 conflict, and these areas in red are the areas that are currently controlled by the M23. But I just want you to zoom down to the box in the bottom right, and you see that in terms of the overall surface area of the country, it's a relatively small piece of land. Not to say that it's insignificant, but it's, as I mentioned, it's a huge country. Nevertheless, in June of last year, the Trump administration brokered and then subsequently hosted the signing of a peace deal between Rwanda, the neighboring country to the east, and the DRC. And I'll explain what this means in a second. But just to say that the eastern DRC has seen conflict on and off for the last 3 decades, albeit with ebbs and flows. And of course, there are multiple armed groups in the country's east, but this M23 conflict is the one that's had the greatest geopolitical impact. So the M23, which is the March 23rd movement, and its political umbrella group, the Alliance Fleuve Congo, or Congo River Alliance, which is known by its French acronym, AFC, they have come to take over these pieces of land that we've seen in red just a minute ago. And that began in 2021. So just to give a bit of understanding of this conflict, basically the DRC, which is backed by evidence from a UN expert panel, among others, accuses Rwanda of supporting the M23 and the AFC rebellion. That rebellion, as I mentioned, started out in late 2021 and progressively took over this territory in North and South Kivu provinces, which you can see on the map. And it really came to a head in January of last year when the M23 took the city of Goma, which is approximately 2 million inhabitants, and then shortly thereafter, in February last year, the city of Bukavu with over 1 million people. And so these are the 2 biggest cities in the country, and that was the point where we saw international attention really pick up on a conflict that had sort of simmered for a few years. Now, Rwanda claims in this conflict that it's maintaining, quote, defensive measures, and it's citing its own security concerns, mainly the continued presence of the FDLR in eastern Congo, which are the remnants of the former Rwandan génocidaire from 1994. But many observers view these so-called defensive measures actually as a euphemism for what in reality constitutes robust support to the M23 by Rwanda and the Rwandan Defense Force in order to exert a degree of control over part of Congolese territory and its resources. And in a recent statement to the US House Foreign Affairs Committee, the Rwandan ambassador to the US actually admitted that they engage in, quote, security coordination with the M23/AFC. But Rwandan support for the M23 and its predecessor organizations has been something of an open secret for decades. These far eastern parts of the Congo have a lot of mines, maybe over 5,000, and the vast majority of them are artisanal. They lack major investment. And so part of the reason that these mines are artisanal is precisely because there hasn't been large-scale international investment there. But that also means that the Eastern Congo and its mines contribute relatively little to the country's GDP and its state coffers. So true peace in that part of the country would be transformational. So while this peace, I think, still remains possible, but for the moment somewhat elusive, I want to talk a little bit about what the Trump administration has been doing alongside its peace initiatives. So during a visit to Washington last year by Congolese President Felix Tshisekedi and Rwandan President Paul Kagame, the two countries adopted a US brokered regional economic integration framework, or REEF, which is designed to promote integration between the two countries as a stabilizing element and a way to sort of buttress against future conflict. Of course, this REEF is also designed to foster a favorable climate for US investment in sectors like energy, mineral supply chains, and infrastructure. At the same time, and arguably even more significantly, the US signed a strategic partnership agreement with the Congo in December, which is designed to improve governance in the mining sector, but also, most importantly, I suppose, to give US and aligned persons a right of first offer for projects that are part of a newly established asset reserve. And so the DRC last week sent a first list of state-owned assets to the government, to the US government, as part of this agreement. And I should, of course, mention US interest in critical minerals began under the Biden administration, which has continued under the current administration, particularly with its support to something called the Lobito Corridor, a rail link that would link the Congolese copper belts in the southeast of the country to the Angolan port of Lobito on the Atlantic Ocean. Now, I want to just go to the second slide, George. I want to emphasize again that it's important to understand the DRC's demographics and geography when we're talking about investment and the overall picture there. So this is, first of all, a country of around 110 or 120 million people with relatively poor road infrastructure. It's 2.3 million square kilometers, which makes it the second largest country in Africa by area. And as I mentioned earlier, the conflict part of the country is sort of on the right-hand side, bordering a little bit Uganda, Rwanda, and Bukavu in the far east. But as you can see from this map, a lot of the resource deposits are actually in the country's southeast, particularly the copper and cobalt, and going up a little bit farther north, some of the lithium deposits as well. So they're outside that immediate conflict zone. And this is a country where, getting places by road can take days instead of, hours. So with that background, I want to start today's discussion by turning to Michel. So Michel, you're based in Kinshasa. You've spent several decades working in the financial sector in the DRC and elsewhere on the continent. And so I'm wondering if you can tell us how that sector has evolved over the last several years. I think we've seen an expansion in the financial sector. What can you tell us about that?
Thanks, Joshua, for this, and thanks for the organization of this webinar. I think DRC is attracting today a lot of interest. And as you mentioned, the financial sector is, I would say, the sector that is the best witness we can have to see how this economy is evolving for the last 2 decades, I would say. Banks had been reduced to a very single word at the end of the 90s, after all the unrest that we have gone through, that I won't need to remember here. But what is interesting is that at the beginning of the 2000s, that's where, after the end of the war and the stabilization of these institutions, and especially the increase of price of copper and cobalt that started early the 2000s, that some flows, some economic transaction became visible and became important. And this is how the banks that I think had reduced to a single level of $50 million for balance sheet, the total balance sheet. I think there was around 10 banks at that time. Today there are 15 banks. And as of end of 2025, the total balance sheet of the banks reached close to $20 billion. It remains very, very small comparatively to as a total number, and even as a percentage of the GDP of the DRC, which is around 80 billion today. but we have seen exponential growth of the sector and a multiplication of the actors. In the end of the 2000s, I would say 2003, 2004, that was the first wave of private businessmen that had invested in local in the industry that was empty after that was left empty. That's where you had the creation of banks like Royal Bank, Trust Merchant Bank, that came into the market. There's only an international bank that stayed there and still has followed through all this process, which is Citibank, the US bank for which I worked for more than 2 decades, and that still is there today, like a kind of a witness that the situation is getting improved, because we saw so many names exit the market. And end of the 2000, early 2010, on that decade, we had a lot of regional banks coming in. I would say Nigerian banks came, 3 or 4 of them. We had more regional banks like EcoBank that entered in the economy. And recently, in the last 2, 3 years, there we saw banks coming from the east of Africa, the Kenyan banks essentially, coming there in the market, not by with greenfields, but coming with acquisitions, entering the market by repurchasing or partnering with local banks, especially those created by families, by private families, early 2000s that had grown pretty much during that period of time. I think today, banking intermediation, if we have to give up a few numbers, we talk about maybe 5 million people accounts that exist in the banks, which is remain a very unbanked country out of the 100 million more or less population, remains lower than the average in sub-Saharan Africa, means giving a lot of opportunity to for growth in the system. But banks were not the only one to enter the financial industry. We have insurances that came from scratch. Regulation was only liberalization of regulation is very recent, end of the 2019. And today we have more than 10 insurance companies that are raising more than 350 million turnover in premiums that are collected directly on local corporate. You have microfinance and savings banks that are more than 100 today, and the newcomer, but not the least, the more spectacular are the mobile fintechs and mobile banking. Today, thanks to the tremendous growth of the mobile telecoms in the country, I think today we have more than 30 million SIM cards that are being circulating in the country, coming from virtually zero 2 decades ago. Half of them today are connected to the financial system through wallets and are managing and holding larger and larger numbers of transactions from one year to the other. So the financial sector is very, very dynamic now, has important returns, and is attracting a lot of investment. Today, 15 licenses are only granted. The minimum level of equity has been risen by 10 times over the last 15 years, and it is a sector that is more and more being regulated and attracting more and more activity, because most of the economy around it is also pushing very fast, as Jeffrey just showed on the slides.
Michel, can I just ask a quick follow-up question? So one of the institutions that I've heard a lot about and seen is the Kenyan Equity Bank, which moved into DRC several years ago. And I remember reading, I think a year or two ago, that its revenues in the DRC had actually surpassed its revenues in Kenya itself. Can you explain a little bit about how they've come into the market and how they've been so successful?
Yes, as I explained in my introduction, you had the first vague of foreign banks and regional banks arriving, and Equity was among those ones in the middle of the 2006 or 2007, I imagine. They came, but they had from scratch the strategy of acquisition. They had acquired at that time a small German bank, a German development bank that was called Credit Bank. So they bought it, and they stayed in that pocket for a decade, preparing a much larger acquisition. And they bought, I think, 3 or 4 years ago, Banque Commerciale du Congo. That was the then largest commercial bank of the country, which was itself a legacy of the colonial times from a Belgian group. So they repurchased it and merged the two banks and became today neck to neck with the Raw Bank, the second bank of, I would say, one, they are neck to neck, one is first and second bank in the country. It has been okay. All the mergers have their own challenges, and they had to overcome it. Different systems, integration of teams and portfolios that were very, very different. But what we can say is it was successful about this merger and makes that today equity is preparing itself for the next decade coming, and being a very solid player in the financial sector and in the economy itself, because with the attraction, all the activity they're able to attract behind is certainly the integration of different business segments. They repurchased a bank that is a corporate bank, the former Belgian bank, and they brought from the east their business model with a retail banking and with a heavy orientation and investment in the digital banking, and look into sectors that were not really taken care of by the existing financial sector, which is the SMEs and the agribusiness and the health sectors that had not been so far of any interest for banks because of the difficulty to evaluate and assess the risk. But this is not only real for DRC. I would say in most sub-Sahara countries, it's very difficult to come up with a proper model for the SMEs and the small businesses and the businesses out of the large cities. Let's remember that DRC does not go out of the African model, that more than 50% live in the large cities. And as you have seen on the maps, that it was shown on the maps that you just displayed, the bulk of economic activities in the mining regions, in the Katanga, and in Kinshasa, because of the population head of institutions, where I would say that 80% of the financial activity is also taking place. So by coming up with models that integrate SMEs and go beyond the perimeters of the large cities, Equity came up with a model that is different and that is growing very fast. Even if, of course, it has its own risk embedded that needs to be monitored. So I would say that would be the keys of the success, and of course the regional expertise, because it was not the first experience. I think this experience had been tested in other countries, even if today, as you mentioned, DRC became their largest sub, that is surpassing at some point the turnover and eventually the revenues of the headquarters. But the model had been tested in other Eastern Africa countries like Kenya, Kenya, Tanzania, Burundi, Rwanda. Okay. So it's a model that have been tested, and they are today developing a proper DRC model, because DRC, and this is true beyond the financial sector, has its own characteristic, and a company or investment that has a chance to survive there and to develop has to come up with adapting its own model to the DRC, and then it becomes a very, very successful story.
Thank you very much, Michel. I think, one of the things obviously that we absolutely need to talk about when we come to investment in the DRC is risk. And so I want to turn to Paul now and ask you, as somebody who is deeply engaged in the DRC, but who's also worked in other parts of the continent, what are the kinds of risks that are at the top of your list when thinking about the DRC as an investment destination, and how does it compare to your experiences in other parts of the continent?
Okay, thank you, Joshua. Thank you for having me, and thank you for that great introduction, which I think was entirely accurate. let me just say a few things first before I get into the specific risks and things that we look at. From what I've experienced, certainly over the last 5-6 years, is I'm of the opinion that a lot of new fortunes will be made from the Congo, in the Congo, in the coming, say, like 10 years. There are opportunities in everything, like you can't imagine. And it's not just investment. I'm sure there's a lot of participants in the attendees in the webinar that aren't looking to actually invest, but they want to do business there. Well, the answer to that is there much business there? There's an enormous amount of potential business. And you've got this huge country of say 110 plus million people. They require everything. We're in the electricity sector, and there are cities there that are off grid, 4 billion people. That's the size of what we're talking about, and that's just say one city in Buji-Mayi. But is it easy? No, it's not easy, and you need a lot of patience and a lot of resilience. But for those who've got that patience and resilience, I would sort of categorize it compared to many other countries, not just in Africa either, but all over the world, which are let's classify as developing countries. The things we look at are obviously the political risk. And in Congo, because of the news about the Eastern Congo, everybody's concerned about security and physical risk. It is because of the size of the Congo, as you were trying to explain earlier, because of the size of the Congo, it appears very far away. There's no motorway you're going to drive from Kinshasa to the Eastern Congo. I mean, it is thousands of kilometers away, and it feels like it's almost a different country sometimes. So for 30 years, while this conflict's been going on, people have not been freaked out about what's happening there. We're one of the only companies that have an investment in Goma, just off the Goma on Lake Kivu. It's obviously on hold at the moment, but we're not running away from it. We feel that when there is implementation of peace, which is of course the big question, that project will be in play, and we'll be able to make a good contribution towards the REEF that you mentioned, the Regional Economic Integration Framework. So we have risks. What happens is that when companies who are in this webinar go to the Congo, they give the business development people a checklist, and they say, go through and score this country. You can take the main headings, political and sovereign risk, legal and regulatory risk. I'll give you a quick example there. They have a new regulator in the electricity sector. They're very good, but they take time. Okay, it's a process. They joined the IMF program. So there's a lot of rules and regulations related to the agreement with the IMF, which have been implemented or being implemented. But we've experienced frustrations because it was all new. People didn't quite understand what they've got to do. But we've seen goodwill everywhere. It's a nice place to deal with the people there, great people. Security and physical risk, we've talked about that. Financial and forex risk. Well, actually, what I tell people is that the financial situation there is better than most African countries. It's dollarized. It's easy to export capital. You just go to the bank, and as Michel explained, the banking sector is in great shape. It is better because you can literally go in a shop, and I went in a shop and I bought some some drinks from a bottle store, I pay in dollars. It's just completely dollarized. So it's great in that respect, whereas a lot of other African countries are not. There's also the corruption and compliance risk. It's the sort of thing nobody ever likes to talk about. Is there corruption? Of course there is. Yeah, there's corruption in is there corruption in many countries, not just in Africa? Yes, there is. Do people get involved in it? Yes, they do. Particularly some of our, let's say, geopolitical competitors. We, of course, we can't play around like that. And it's sometimes a challenge for us when we're competing with people who will do things that we're not able to do. And I would say that we've paid a price in time to get our deals done because of that. So that's where I come to the patience and whatever. But is it possible to do business in the Congo and not pay bribes? Absolutely it is, right? Absolutely. You don't have to engage like others, some do. Is it compared to other countries any worse? I know a lot of countries, I'm not going to name any names. I know a lot of countries in Africa that on face value, they look great compared to perhaps the situation with the infrastructure and everything in the Congo. But in fact, they're worse. So it's corruption is a difficult one, and you have to just have your eyes open when you go there. You've got ESG and community risks. You have to build projects and deal with the population and the stakeholders. And you've got infrastructure risk. I mean, we are an infrastructure investor. And I can tell you that you need to be sure you're going to get your electricity if you're investing money. But an awful lot of investors are there now. The government is open to private sector participation. And it's one of the only countries in Africa where every element, generation, transmission, and distribution in our sector is all private, or can be all private. There's a government entity too, SNEL, but you're able to do everything private. I've almost finished now. Operational infrastructure risk and capital protection and exit. Again, it's no different than anywhere else. And in many ways, we feel more secure with the capital situation because it's so easy to move money back and forth and around the country. So it's great that the banking sector is so flourishing in the Congo, and it's a good indicator that things are very much changing there.
Thanks very much, Paul. Before we move on to our third speaker, I just want to ask a quick follow-up, which is, you mentioned that the DRC government is open, and I wanted to ask you a little bit about whether and how the government is working with investors to try to assuage some of their concerns surrounding risk, and if there's anything more you think that they could be doing.
There's a lot more they could be doing, a lot more. And I would love to do a webinar with government people one day, or an in-person session with people to explain, the sort of things that investors look for. What you have to allow for is, Congo is coming, or DRC is coming from a really bad past. Okay, the corruption, it was in the old days they called it a kleptocracy. It's coming from that. Things have been done differently in the past, but what we've seen is with the government of today, a big improvement of the institutions. We deal with them. So we're seeing that they have good institutions. They have highly competent people, really competent people, as good as you'll find anywhere on the African continent. But people are learning. They're learning what investors need. They're learning what business needs. Do things go wrong occasionally? Of course they do. Do they fix things when they go wrong? Yes, they do. They don't leave you out to dry. So we've seen progress, but I would say it's taken us a lot longer than it should have done. But I don't put that down to bad faith acting. I put it down to a change in the way things are done. And frankly, I think the IMF is a huge factor in this, that people just didn't understand that there's a clause in the IMF agreement that says all things should be competitively bid. Well, they've been giving contracts out in the past, pre-Tshisekedi, to just everybody they know. So we're pleased with the progress made by government. I don't want to sugarcoat it so that it's all wonderful. It's challenging for sure. Infrastructure is poor, but will new people, including foreigners, investment, new people are going to make fortunes there in the next 10 years.
Thank you very much, Paul. And before we move on, I just want to remind everyone to please submit your questions in the Q&A, and we're going to reserve some time before the end to speak about them. I want to turn to you now, Nabil. Picking up a little bit on this question of risk, and as we've been saying, at least the perception of the DRC is that it's a high-risk place, but at the same time, we recognize that it sits really at the heart of global mineral and energy value chains. So from your perspective, from the perspective of Africa 50, what makes the DRC a compelling infrastructure investment destination? And what conditions need to be put in place for private capital to engage there at scale?
Thank you, Joshua. I'd like, first of all, to thank Invest Africa on behalf of Africa 50 to having us and to having me today. So thank you. Very glad to be here today. Thanks for the question. I'm not sure if everyone is aware of Africa 50, which is like a Pan-African infrastructure investment and asset management platform established to help bridge continent's infrastructure funding gap and to contribute to Africa growth by developing investable and bankable projects, also catalyzing public sector and private sector funding. So today, as we speak, Africa 50 has 32 African countries as shareholders, including DRC, which is one of our shareholders, African Development Bank, Central Bank of West African States, Bank of Al Maghreb, as well as PIC, largest pension fund in Africa out of South Africa. Today, we have more than 33 projects in portfolio with a value of more than $8 billion. Speaking on the energy side, we have close to 2,000 megawatts of assets in operations across 31 countries. We are mainly active in various sectors, including energy, be it generation, transmission, but also on the midstream gas, transport, ICT, water, healthcare, and education. So just to put the scene and how we intervene, like we don't do necessarily politics. I think we appreciate there is always in Africa. We focus mainly in Africa, and we know there is a bias between real risk and perception of risk, but that's maybe a different subject for another day. So for us, yeah, the DRC is a key country, as it was said by previous co-panelists. DRC has sits at the center of several global value chains in terms of critical minerals, clean energy, as well as a center for regional trade, including the African Continental Free Trade Area, which is an important element for us as an enabler to implementation of this important agreement for the African countries. So I would say in summary, opportunities in DRC are not theoretical. They are structural, they are long terms because of the position in the center of value chain, global value chains. But what's holding the investments or bankable projects is not a resource potential, but mainly the absence of bankable infrastructure projects that would reduce costs, optimize in a more efficient way. And that's why Africa 50 has been set up to develop the project at scale, in particular the sector that I have mentioned. We believe that DRC is a turning point in terms of demand that is locked in, and the question is how we built up the backbone that allows capital to engage efficiently at the scale. And happy to share later on how we have been doing that. So I think we have been involved in a couple of projects in DRC, but also regional matters, including today we have a project that is publicly announced that has received a presidential decree from Angola. It's an Angola DRC Zambia transmission line that will provide the surplus capacity that is in Angola to support all the development in terms of energy transmission side. We are also working on an important project in terms of in the ICT space, providing the dark fiber to the countries, landlocked countries. It's called East to West company that is aiming to bring fiber optics across the continent. If you look at the continent and the ICT infrastructure, more of African countries are supplied by cables that come in from outside Africa and mainly addressing the coastal areas. That's why this is one of the limitations that we see also in the continent, how to make like one octave of data traveling efficiently east to west or north south. One other project that it is still under development is the Two Congo Bridge, which is also looking to, as I mentioned, part of the African AfCFTA that will help unlock the potential capacity in terms of transport, free trading of goods within the continent, but also outside the continent. Let me stop here, but happy to answer if there are any further questions. Thank you.
Joshua, can I just, for 1 minute, 2 minutes,
Sure.
Cover something which I think a lot of attendees are probably interested in. You know, there's been a lot of news about the Trump administration's interest in the Congo related to critical minerals linked with a security deal for the East. And of course, there's been a lot of media attention about how the agreements have been signed and are not yet being, I would say, properly implemented. And I think that the government, US government, and the Qatari government are working with DRC, Rwanda, and these rebel groups to solve that. However, I think it's important for people to know that what we're seeing here in the US, particularly Washington, is a great deal of focus and attention on the Congo and on supporting investment there. We have the Development Finance Corporation, which is the old OPIC, and we have US Exim Bank, and an agency called USTDA, who give grants for feasibility studies and things like that. And I think that what they are all very seriously interested in the DRC, and as it relates, of course, to the DRC and other things, to Angola. So the amount of attention that it is, in all the years I've been here, outside of Iraq and Afghanistan, I don't think I've seen so much attention whereby every week there's a conference on critical minerals or rare earths and the like. So I think it's important to know that there's an extraordinary thing. And finally, the DFC has just been reauthorized for, I mean, they've gone up from a appropriation of $60 billion. They're now at $205 billion. So they're looking for deals to be done in investment. So I thought I'd just insert that because I know a lot of people outside the US are interested in what's going on here.
Thanks very much, Paul. Indeed, it's helpful to get that perspective on what things are, what people are thinking and doing in Washington. I did want to move in the last few minutes to some of the audience questions. So I want to start actually with a very practical question. which is, and I'm going to send this one to Michelle, and maybe Paul, you can pick up on it if you want to. But we have a question about how important French is as a language of communication in the DRC. How are English speakers able to communicate and do business there?
I think the Congo economy is very diversified. I will give you an example. I was CEO for Citibank Congo for say 15 years, and I had hired as executives in the bank English-speaking people from other African countries or even one American. And they stayed average 5-6 years each. And when they left, none of them spoke French. And they didn't need to use French for their duties because most of the corporate world that is making the bulk of the economy today is English speaking, to say the least, because since the economy has a lot of diversified, some on the extreme east also languages are practiced in Congo. So no, English is it's important. It's a French official language country, and all administration is done in French, but it's possible to do business in English. It's not quite an insurmountable barrier.
Mm.
Yeah, to be honest, compared to a lot of French-speaking countries, it's fine. You know, a lot of the people there do speak English, and they speak it well. Many have lived outside of the Congo and have returned or have been educated outside the Congo. And frankly, you know, when you're in the taxi and the taxi driver doesn't speak English, he gets his mobile phone out and he does this little technical thing and uses this technology to try. I've driven around in more taxis than you can imagine with a guy talking into a mobile phone to translate. So these days, it really is an impediment to doing business. What you do have to understand is a little bit about French law and Congolese law, which is obviously different than English law.
Thanks, Paul. That's an excellent point.
Yeah,
sorry, go ahead, Michelle.
No, I just want to complete Paul saying that the law in DRC is more based on the Napoleon Code of the French side rather than the Anglo-Saxon law. But it's something that is true in various parts of the world and where businessmen get adapted very easily.
Yeah, you just have to understand what you're expected to do. They're very formal.
Yeah.
You know, you have to write a letter and it has to be formatted properly. So I would say a lot more formal and bureaucratic in that regard than perhaps even we are here today. But that's good because it sort of keeps everything on, you know, institutionalized and on track.
And I think you both bring up a good point that the local knowledge, local expertise is so very important
you need
to
a local
success.
partner.
Yeah.
Whatever you do, you're going to need a local partner. We've been very lucky. We've got an excellent main local partner, a guy called Mwanza Singoma. And there are many. I mean, I've met so many companies doing business there that they swear by their local partners in the Congo. Congolese people are great. They're really lovely people.
We have another.
Paul here. I would complete quickly that one on this one for the partnership, if you don't mind. I am a member of the FEC, the Fédération des Entreprises du Congo, with the Chamber of Commerce, of which Mr. Singoma, who is Paul's partner, is also one of the directors. And this type of platform is very important when you enter for the first time in the country to make sure that you have the proper interface. You understand where you're piloting your case.
Yeah,
absolutely. I want to turn to. Sorry, go ahead, Nabil.
Yeah, I just want to stress this point of partners. Thanks, Paul and Michelle. I think this is something similar that we look extensively also having strong local partners when we do our projects. I want to mention one of the funds that Africa 50 is managing is called AGIA, which is looking to, one of its mandate is also to support local developers. So this is a funding pool that is available to support local developers as well. So I just want to make this point about the importance of local partnership. Thank you.
Thanks, Nabil. There's a couple of comments and questions in the Q&A here about some of the challenges that businesses face, concerns about local bank accounts being frozen, and obstacles for doing business. Jacob Wayman asks, how do you explain some of these obstacles, and what should the government or other actors be doing to improve the business climate? I don't know if you want to take that, Paul. Yeah,
I can answer that one. You know what, that question, you could apply that to many African countries, right? You know, it is not abnormal in some African countries, and frankly, let's just not say African countries, in some countries around the world, it is not abnormal for you to get a tax bill one day which is completely insane, and you refuse to pay it, and they freeze your bank account because they're entitled to do that under the law. They can even garnish your bank account and take the money out. So you've got to be aware that those things can happen. So you need to not ignore a crazy tax bill because you think it's ridiculous. You need to put a lawyer on it, and the lawyer has to deal with it. So do those sort of things happen? Yeah, I've heard about them, but not on a scale that is crazy. But you know, it's not no different than many countries in Africa. No matter how well organized some of them look, these things happen, and Congo is no different.
Thanks, Paul. I don't know if you want to weigh in on that Michel or Nabil.
Yes, I think the seizing of the bank accounts is it's a kind of things that is happening, I would say, regularly in the DRC, and that the banks are taking that in hand very seriously. The banks are organized around the national banking associations, and which is member of the FEC that I mentioned earlier. And this is the part of points that we raise regularly to the government and the judicial authorities. That, of course, when it's needed to have to arrive to such situation where some accounts have to be garnished or locked, but it shouldn't be like a systematic technique to increase the fiscal pressure on the companies. So this is something, because we need to protect the banking sector, that is being addressed and on the table of the improvement of the business climate. That is an ongoing exercise.
We've been there 6 years, Joshua, and it hasn't happened. I've heard about it. Has it happened to us in another African country? Yes, it has. So it's one of the hazards of doing business. It's not so much about the fact that they have the right under the law. It's how you deal with the process that leads up to that, that prevents it. But they're not going around looking for businesses to seize their bank accounts and take their money. It's not the day-to-day activity of the authorities there.
I think we have time for maybe one more question. Okay. So we have a few comments and questions in the Q&A that are focused on this question of, I think, time. So in other words, how to give confidence to investors who are investing in long-term projects. And this question about whether it's the confidence can come from the Trump administration's interest and through things like DFC and Exim Bank, or whether it's just sufficient assurance coming from the DRC itself. So how solid do you think the assurances are for engaging in long-term projects in the DRC? I don't know if Nabil, you have any thoughts on that?
Yeah, sure. To be frank, I think it was said by both Michel and especially Paul as well. I think today DRC, in our views, from risk reward perspective, I think it represents a lot of opportunities. We don't see necessarily any DRC specific risk compared to other countries where we operate. Of course, each country has its own details, but from a risk perspective, I think I would retain the large numbers of opportunities. We're talking about a country is almost 115 million inhabitants with huge needs in terms of, at least I'm speaking on my perspective as infrastructure investment. I think we see huge needs to deploy to deploy the capital and to develop the infrastructure required for the country to reach the development stage, as well as to be able to export and to manage to transform the huge potential it has in different sectors. So this is our lectures today, how we see DRC potential. But of course, there are challenges, as it was highlighted by my co-panelists. Developing bankable, we're talking about long-term infrastructures requires patience, patient capital, also resilience, as previously mentioned, but also I think from a government perspective, they are aware of conditions that investors are looking to make a bankable project in terms of stability of the regulations, in terms of change of law, in terms of a certain numbers that makes projects bankable. But I will to not make. I know we reaching almost the end of the session, but I think I would retain the number of opportunities that we see in the country. Have a good partners, have solid partners, advisors as well that could help you. And I think it's not the lack of funding that we see, but also we are here. Also, institutions like Africa 50 are there to support the private sector, but also the governments to make the project bankable at a scale level.
Thanks, Nabil. Paul or Michelle, do you have a quick last word on that, or anything else before we wrap up?
Yes,
Go ahead.
yeah, I can say that to look at long-term vision. What we are seeing today in the country, large mining projects of billions of dollars, infrastructure being done or launched. The banking sector that we just mentioned at the beginning of this webinar that has grown in multiples of its size in a decade and a half. At that point, when the investors decided to kick off on those projects, the Trump administration or whatever other events that are taking place today didn't exist. I think at some point we need to have a vision. And the vision today is that one that the DRC is a great place to make investments, because on the medium term and on the long term, it has tremendous returns. It has embedded risks. It had frictions that need to be managed, but it's not especially more risky than we might encounter in other environments. We're talking today about the difficult situation on the east. It is a terrible political situation, but it has no or virtually no macro shock on the macroeconomy of the country. And the country has been ongoing, and we are able to have the discussion we have today in making perspectives in infrastructure, mining, energy, and other sectors that are also very large potential. So I think today is having the vision, take advantage of what is happening. The US, Paul mentioned the various initiatives that are happening on the US side. And yes, those initiatives are true and are concrete. So let's take advantage of them and let's move forward. This country has huge margin of growth.
I would say that DRC is still a work in progress. I think the Tshisekedi government, given the enormous challenges it has with these other issues, is making good progress. There's a long way still to go. And I really do believe that it's a place where people should be going out and looking at they just need everything. So the opportunities are enormous. And as I say, it's not entirely just for investors as such. There's all sorts of services that the country needs, and they want a relationship with, it's one of the few countries in Africa were during the Cold War. They were America's friend. Um, so there's a long-standing relationship there. I think it's a good idea to have an intersection with the United States at the moment, partner with US firms, because I think that anything that has a US footprint is going to do well in the Congo because of the engagement that is taking place and the priority that the government is giving to US investors and US investments at the moment. So yeah, I'm optimistic, but realistic. Let's call it like that.
Thank you very much to our speakers. We're at time now, so I'm going to turn it over quickly to Callum Hill from Invest Africa.
Thank you, Joshua. Thank you for your guidance of moderating through that conversation, and to Michelle, Nabil, and Paul for your comments throughout. I'd just like to highlight a couple of things upcoming with Invest Africa. We've had the opportunity to hear from our speakers their perspectives of doing business in the DRC, and we would like to hear yours as well. We're currently running a DRC investor sentiment survey, which you can scan the QR code on the screen to complete, which is an anonymous piece of research within Invest Africa's consult research practice. So we welcome your participation there. And then if I'm to talk about some upcoming Invest Africa events, Paul mentioned the DFC and USTDA, both of whom will be speaking in our upcoming mining series in Cape Town in a couple of weeks. So if you are in Cape Town for the Mining Indaba, please do join us on the margins of that at the mining series. As well as our upcoming inaugural investor dialogues taking place in Washington, D.C. These gatherings on a bi-monthly basis will bring Washington's key policymakers together to talk about all topics related to increasing trade and investment into Africa. And then, of course, the upcoming World Bank, IMF spring meetings. Shannon will be leading our activities there. As well as Invest Africa's flagship Africa debate, which takes place in London on Wednesday, the 3rd of June. So lots of exciting opportunities coming up to engage with us. As is Shannon's email is in the chat, please do feel free to reach out to her to discuss those opportunities, both DRC specifically as we continue these conversations leading out of this webinar, and then for all other opportunities. But I'd like to once again thank our panelists, thank Josh for our moderator, and thank Shannon from the Invest Africa side for bringing us all together. And with that, we will close. So thank you for joining us.